Hello, everybody. Welcome to Tuesday. The S&P 500 was down 0.15% today. It was really kind of a flat day, not a lot going on. Good chance for me to talk about some of the other things that are happening. First of all, I want to talk to you about the rebalancing that we did inside of the IRA and Roth IRA types of accounts. You're going to see quite a few transactions coming through. When we do rebalance, we rebalance every position back to the model. And I took that chance to make some changes to the model, some things I've been wanting to do for a while now. And the nice thing is there's no taxation in those, so we don't have to worry about, accounting for that. And then also, using TD Ameritrade, we don't have any, commissions for those either. So that's a great thing. We've had to do a lot more transactions so far this year just because of what's been happening. It's been working spectacularly. The rates of return you've been getting are because of these transactions. On the other types of accounts that are taxable, like trust accounts and individual accounts, TOD accounts, et cetera, we did not make those changes en masse like that. It just creates too many transactions to account for, and it creates too much taxation. We actually go through those accounts by hand on a monthly basis. And we basically move over those pieces that we think are the most important to move over, where we think we can make back any kind of capital gain that we might have to pay. So that's sort of a different situation. So anyway, just a heads up for you'll see a lot of transactions coming through, but it's all okay. Again, we don't make anything on transactions. We're just trying to make the accounts grow, like they have been. So I've been getting questions about the stop losses. What are they? How do they work? Where do we set them and such too? So let me discuss that, because I think it's a really interesting area to me altogether. This is a chart here, this CNRG, which is a clean energy, Kensho clean energy piece. We started buying this back here. It's had a fantastic run, made lots of money, and you can see this red line here is a stop loss. So what a stop loss is, theoretically, is that when this price falls down to that red line, it'll sell our 58,000 shares that we have there. And so it kind of protects some of these, gains. Now, it doesn't always work. Price can jump through there and we maybe get a different price or what have you, but it's a very valid methodology to try to protect risk. And I don't normally use them because I don't want to have a stop loss in here, for example, and get wiped out of this just before it goes running up, for example. But this is an extreme run here. This is really, really moving. And so I put a stop loss right here. So the reason it's here has a lot to do with this volume profile. So every one of these little bars shows how many shares traded at each share price. And so you can see there's a lot of shares traded right here, which makes sense. You can kind of see that the price spent some time there. And so that's why that's there. So I put this stop loss just below this big grouping of support. So if the stock does fall, maybe it bounces and keeps on going. If it breaks through here, the next support is here. And you can see that's because of this little consolidation here. And the next support is all the way down here. This red line just represents the highest support level of the entire time frame. In this case, it's a year. But this is about 34% from where we are now. So I'm not that interested in writing this all the way back down, especially since this stop loss in this particular case is just for the IRA accounts. And I don't have to worry about any capital gains that we might have made so far. I can, get out for a while. If I want to get back in, I can, maybe I want to go someplace else or what have you. But there are lots of different places I might place a stop loss. If this was in a very conservative account, I might move it up here, right at this level, because somebody's, being more conservative. They're trying to protect the downside. They still want to see if it's going to run, but we're trying to protect that downside a little bit closer. Or if I actually kind of wanted to get rid of this position for whatever reason, maybe I had something else that I was more interested in, then I would tighten up that stop loss to this point. On the other hand, let's say that I really had a huge capital gain in this. I might move that stop loss all the way down to here, just, to let it run. If it does fall, okay, maybe it'll stop with this, support. But if it falls to that support, maybe I just want to protect my gain at that point and pay my taxes. So again, taxation, volatility, all those things play a factor in where you're going to place your stop loss. But it's really, really critical to take a look at a volume profile to be able to see where those support levels are, so that you can accurately place a stop loss, because technically if it's a position that you still hold, you probably like it, you probably don't want to get knocked out of it. And so you're really hoping, to pick a spot. A lot of times people just pick a random percentage, 10%, 15, 20%. I like looking at the chart and placing these, more precisely as far as that goes. So um, that's what a stop loss is. I think it's something that everybody should be using in this market environment right now. Uh, when you're in these sideways choppy markets or what have you, that's a different story as far as that goes. But when you've had this type of fantastic run up, the PE ratios here are ridiculous. Those types of things could definitely go higher. The vaccine's coming, pent up demand, zero interest rates. This thing could go significantly higher. And if it does, I'll continue to move this stop loss up as far as that goes. But, just in case, we want to protect some of these pieces. And again, they're not perfect. They don't always work, but I do think it's a valid strategy for controlling some of the risk and allowing you to kind of just stay in there. If it keeps going, great. That's perfect. So we have stop losses on all of our major pieces, all of our volatile pieces, we have stop losses. Those accounts that are more conservative, we have those stop losses a little bit closer. Those accounts that have taxation, we have those stop losses a little bit lower. We want to let them, move around more. We don't want to generate a bunch of capital gains unless we absolutely have to. We don't want them to turn into no gains. So that's important too. But, there's a balance there. So that's part of the calculation. It's fairly complex as to where you put these and what have you. But it's a really fun environment to be working in for those types of stop losses right now. So anyway, that's what's happening right now. Hopefully that helps answer some of the questions that have been coming, and look forward to seeing what's going to happen tomorrow. Thank you very much.